Hi, I'm Peter Rose, founder of Longwood Currency Trading and How to Trade Forex Price Breakouts. Generally, a breakout, when you're talking about a breakout, it comes from extending either from the top of a channel or extending down below the bottom of a channel. In other words, you're blowing past a resistance level or you're blowing down past a support zone. So I just like to look at this in a more realistic manner, because if you're not aware of what causes not only the breakout, but what's the underlying cause of that, it's this channel that you're coming out of, and that all has to do with order flow. So let's take a look at the whiteboard and we'll check it out. Okay, so in trying to get through this before the sun shifts in the windows, and this becomes even more unreadable to look at the whiteboard. So here's a scenario that we could be looking at. You have this resistance zone and then a support thing, okay? And so you've got this kind of thing going on. And you're right here. So resistance, support, and we're going to assume here we're on a 5 minute time frame. And this could be, this is probably from there to there, maybe say 30 to 40 pips. Pips, that's a P. So there, you got plenty of room to do your trading within that range on this 5 minute chart. And so this breakout would appear to be probably about 15 pips, okay? So you have to ask yourself, in the spectrum of order flow, what does this mean? And you would say that there's an order imbalance caused by the harmony that's been expressed here in this 30 or 40 pip spread for a long period of time, and that people have agreed on the price that they want to pay for something and the price that they want to sell something for, or they're buying it down here and they're selling it up here. So there's agreement between the parties. So there's something going on. There's orders being processed between these two parameters, and now all of a sudden we've got this thing breaking out, and it's a 15 pip breakout, and so that looks pretty cool. However, how often have you seen this particular thing come down and do this? A lot. Now, it's either going to come down into here, let's say, and then go back up and continue in its happy way there, or maybe this is just a continuation down here, and maybe the real break is there. So, and this is just something in currencies, not so much in stocks or commodities or anything else, because it has to do with the zero-sum game function of currencies that isn't really inherent with any other of the investment vehicles. If you don't understand that, you better not be trying to trade breakouts, because you won't get why this happens. Regardless of the fact, how do you know then, or what are you making your supposition for, that this 15 pips could be a breakout and it could be valid, and you're going to place your bets on one side or the other of that? Because here's the thing that you're going to have to look out for, is that on the other side of the coin, you might have something like this coming up here. Okay, this is a 4 hour. That's a 4 hour chart. And so this section right here is that. So in this reference frame, as a day trader, you're looking at a 5 minute chart and you're saying, oh shit, man, I got a 15 pip pop going out here. Maybe it's come back and now it's going to continue to go in this direction like that. And so I'm going to get involved in that trade. But you haven't taken that into context of the larger picture of a 4-hour chart. You can see that the 4-hour chart is definitely got this kind of attitude toward it. And so you're going radically against a major trend on the 4-hour chart, because the institutions tend to look at the 4-hour and the daily charts for what they're doing. Because remember, they're trying to pass out $3 or $4 billion worth of orders, maybe. And so, I mean, you can't do that all at once. You're not going to shove out in this, whatever this 5-minute period of time is. This could be, I don't know, 3 or 4 or 5 hours, or maybe 10 hours, or a couple of days. You're not gonna blow out $3 or $4 billion worth of orders just like that, because then you get all these huge spikes. You chew yourself up. So you want to do that over a long period of time. So maybe that's what all this is coming in here for. This is a 4-hour chart. So maybe the real transactions that are going on somewhere in this realm, and you're just getting stuck with this. This means these guys are done with this $3 or $4 billion order. There isn't any more buying going on. It's done. And so price here is now doing one of these numbers, falling out of bed. And you're taking this 5-minute chart out of the context of this larger picture, this 4-hour picture, which would clearly say, whoops, we better be on the short side of that. Whereas in this, if price all of a sudden did that, you'd say, oh, I'm all in with this. But a 4-hour candle, here's this 4-hour candle. It's going to be just one of these little candles here. Here. I mean, let's say this is a 3-hour period of time. Let's say that's a 4-hour period of time. How are you gonna garnish this information if you don't look at this and say, look, I've got a wick up here on this candle. It's a 4-hour. It's proceeding down here like this, because all of this is happening in here, and now you're up here. That's this point, right? And so you're right at the top of the base of this 4-hour candle. You've already established a wick. So where is this going to go? Is it going to go up the way that you think? If you're looking at maybe a 15-minute candle, even an hour candle, you may be duped into thinking that that's probably an appropriate trade. So all I'm trying to say is, how do you trade Forex price breakouts? It depends on the time frame that you're looking at the breakout on. Now, you could look at this thing and say, oh, this is definitely going down. But if you look at the daily chart could be doing this. And all of this crap is in here. Or maybe it's turning up, going up instead of going down. And so you have to really evaluate what time frame you're on and what the probability is for the continuation of this movement that you're sensing here. Now, this movement here could in fact be going to continue on, and instead of this happening, this guy could in fact turn around and maybe go up to this part. Well, this could be 150 pips or 200 pips. And so therefore, this trade would make sense in the new context that you're trying to develop here. So just be alert and aware of what you're doing, and understand that of all the things that are going on in the currency market, that these kinds of channel breakouts are classic examples of your need to understand order flow in the currency markets. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.